Will the economy crash in 2021? What we should do now? We have all been witnesses to a truly horrific 2020 and are hopeful that 2021 will be better. However, things next year are looking a lot grimmer than most dare to believe, especially when it comes to our economy. While scientists are predicting a new third wave of coronavirus in January as a consequence of the holidays, economists have a set of disturbing predictions of their own, and we'll discuss all of them in today's video. Will we see a housing crash that takes the market down like what we saw in 2008? Or will the economy remain steady and stronger because of tighter lending conditions? Join us as we explore how the economy will play out next year. We'll help you prepare for what's coming so that you're not caught unaware, but first, remember to subscribe and turn on notifications bell so you don't miss any of our upcoming videos. The present economic collapse is even worse than it appears. One of the things that we need to understand in order to prepare for what's coming is how bad things actually are right now. Month of March marked a disruptive time when the entire world economy was suddenly shut down, which resulted in the catastrophic economic slowdown we've experienced so far. However, as cases began to fall during the summer and the economy started to recover, some economists were quick to conclude that we were well on our way to making a full recovery and that we should be back to normal in no time. But what some of those economists didn't consider was that we would be hit by a second, deadlier wave of coronavirus as we went from fall to winter. As it wasn't just small wave either, it was a tsunami that spread faster and killed more people than the first one did. Contrary to what happened back in March, this time around, there were no mandatory nationwide lockdown measures put into place around the world, and everyone seemed more worried about their personal finance than about the coronavirus. After seeing the impact that the lockdown measures had on the world economy back in March, many governments were more reluctant to declare total lockdown measures when the second wave started, which made cases skyrocket. U, V, W, and L. What does it all mean? Economists like to talk about the way we get through economic hardships in terms of the shape of the GDP curve and other curves that show the state of the economy. To make it all easier to follow, they compare these shapes with the shapes of the letters U, V, W, and L. Take note that all these letters start out with a sharp downward stroke that represents the economic crisis, and the second part represents how we recover from the blow. U represents a slow recovery, V represents a sharp and quick recovery that's just as quick as the crash, and L represents no recovery at all, pointing to an economic depression. After the second quarter of 2020, some economists argued in favor of a slow U-shaped recovery, while others suggested a V-shaped recovery and the rest predicted recovery in the short term, but a 10-year Great Depression around the world after that, already referring to the 2020s as the lost decade. Today, what many of us fail to acknowledge is the fact that lockdown or not, the economy took another blow, sending us into a second recession beginning November, which would mean the W scenario. That's a double-dip recession, something that has only happened twice in the last 100 years. We'll come back to the double-dip recession before the end of this video, so be sure to stay tuned. Now, in the meantime, just know that things are a lot worse than the economist had predicted, and almost certain to get worse sooner rather than later. The upcoming housing crash of 2021. If you remember what the worldwide recession of 2008 was like, you know it wasn't pretty, and it all started with the housing bubble. To make a long story short, what happened back then was the banks began giving out easy loans to a lot of people who couldn't really afford the mortgage. As a consequence, millions of people defaulted on their payments and their homes were foreclosed. This made home prices plummet. Banks panicked and tried to cash in on foreclosed properties as fast as they could, which made prices drop even faster, and finally, the markets panicked as well and crashed, sending the world into a recession that lasted 18 months. Moving forward a decade, and we see that many experts have been predicting a second crash due to another housing bubble that has slowly been inflating for the past 12 years, and that the pandemic could be the needle that pops the inflated housing balloon. This time, it isn't easy lending from the banks that's making people unable to pay their mortgages. It's the pandemic that has left millions without jobs or out of business. This, combined with a set of moratoriums on foreclosures that are about to expire, will flood the housing market with a big supply of foreclosed properties, which could again make home prices plummet and history repeat itself. A deflationary spiral. Many people thought that the Fed would cause the dollar to lose value and create inflation by printing trillions of dollars to cover government stimulus bills. While we have seen some inflation in the past few months, it isn't really as big a problem as deflation, especially during an economic crisis like the one we're going through right now. Deflation is good if we earn the same or more, but the problem is that we're actually earning less because of the pandemic. Another big problem to deflation is that it makes our debts harder to pay off because we still owe the same amount of money, and that debt we owe is now worth more. So deflation isn't implicitly good or bad, but the real risk is something called a deflationary spiral, and it's much more dangerous than inflation. A deflationary spiral starts with people who lose their jobs and their income and stop buying from businesses. Businesses then lose money, so they lay off workers, therefore more people lose their jobs. In an attempt to attract consumers, businesses lower their prices, creating deflation. But that makes them lose even more revenue. Eventually, the businesses go broke. That means even more people lose their job, and the cycle continues wreaking havoc on the economy. This is actually what happened during the Great Depression, and it's not hard to see similarities between what happened then and what's happening now because of the coronavirus crisis. So what should we do to protect ourselves from these potential problems? Let's take a look at what the pros are doing. Why is Warren Buffett on a selling spree? If you want to get an idea about how things are going in our economy and how things are likely to unfold next year, it would be wise to see what the investors with proven track records are doing now. Notice we said what they're doing, not what they're saying. When it comes to investing, few are as successful as Warren Buffett. So it's insightful to take a look at how 2020 changed his tactics during the last couple of months. For years, he had been buying stocks from the biggest names across many different industries. But his filings for the third quarter of 2020 showed that most of the last 22 stock moves Buffett made were actually sells. So he definitely expects a bearish market, perhaps even a crash. Which stocks did he sell? He started off by selling financial and bank stocks. He sold a quarter of his Wells Fargo shares, almost 2/3 of his JP Morgan shares, and all of his shares from Goldman Sachs. This tells us a bit about how he sees the banking industry is going to perform next year. He also predictably sold out of much of his stocks on different airlines for obvious reasons. Now, what stocks did he buy? Buffett didn't only sell his stocks, he also bought a few, the most important of which were from a gold mining company, which tells us that he's playing safe as the storm passes, and perhaps we should too. The second biggest purchase was on Suncor Energy. What these moves really tell us is that Warren Buffett is bracing for impact, as these are the market sectors that tend to do well before a worldwide market crash. Don't you think there's something he knows if he's constantly moving hundreds of millions of dollars around portfolios? How to prepare for the next global recession. If you take a hint from Buffett, the best thing to do right now in order to protect yourselves and our money from the economic thunderstorms to come in 2021 is to invest in precious metals like gold and silver. These assets have a history of surviving economic downturns, acting like a hedge against risk. It's not a good idea to invest in real estate right now because of the real risk of a crash in that sector of the economy, much less in the banking sector, since that has traditionally been one of the worst hit in every single recession in history. Once things do go south, though, it's actually a good idea to do the complete opposite once you get a sense that prices have finally reached rock bottom. In those cases, the best long-term investment you can probably make will be in real estate, especially in suburbs near major cities, since the flexibility of working from home, which is likely to stay here, is making many people move out of big and expensive cities like New York and San Francisco and into smaller and cheaper communities with better living conditions. This will drive home prices up in those places in the years to come. So will the stock market crash in 2021? Some don't really believe that there will be a crash in the markets next year, particularly because of the resilience the markets have shown to the pandemic and the political turmoil during 2020. Surprisingly, markets have actually been performing extremely well, and stock prices have been on the rise from the start and now setting new record highs. However, analysts have noticed that today's upward trend of the S&P 500 is fueled mainly by the likes of Amazon, Facebook, and Apple, and this high concentration of growth in only a few stocks usually precedes a huge drop in the stock market afterwards. As a matter of fact, things look a lot worse in this sense today than they did just before the dot-com crash in 2000 and the housing crash of 2008 we were just talking about. All this could be pointing to an imminent crash like we've never seen before, which is exactly what people like Warren Buffett are hedging against. So, do you agree that the economic collapse is currently a lot worse than it appears, and that 2021 will actually be worse for us in terms of our economy? Are you doing anything to prepare for what's coming? Leave your comments below and join the discussion. Finally, if you found value in today's video, please don't forget to hit that like button, make sure you subscribe, and turn on the notification bell for our upcoming videos. For more information on the double dip recession as well as on the housing market crash predicted for 2021, make sure to watch these videos that are popping up on your screen right now. These videos reveal the how, the why, and the when economists predict things will go down and what we average Joes can do about it. Until then, thanks for watching.